Hello, hello. Good morning, good afternoon. How's everyone doing? Good. Good to see you. Hi, sorry for being late a couple of minutes. I was in another meeting talking to an investing opportunity with the CEO of a company. They're looking to raise some funding. So it is a good discussion. Who do we have right now? Some of the familiar names. Oh, Ramesh ji, you back with your original name. Good, good to see you back with a name that I recognize. Uh, Morning,
Yeah,
Sam.
finally got it figured out how to do it. Got a new laptop with Windows 11, so it's kind of confusing.
Oh, okay. I thought I had someone new person joining from Michigan.
Yeah, I kept quiet. I didn't want to reveal it until I fix it.
Uh, all right. Hey, Sam. Welcome, Elaine, GP, Jose, Lalitram. Is it the first time, Lalitram, you're joining? Or maybe did I miss your name in the previous meetings?
No, this is my first time.
Okay, what brings you here?
I just wanted to see what this was about. I'm looking to get like better at investing, and I recently joined investment counseling as a career, and I'm trying to like grow my career. So I'm just interested in listening for today.
Cool, good. Uh, Mike, Morris, Reggie. Oh, Sabir, good to see you here.
Vivek, how are you? Good
Good,
afternoon.
good. How are you?
All good. Yeah, I just came to know of this forum this week. Obviously, met you at the Warren Buffett event
Yep.
last month, so thought I'd join, see what is being discussed, and opportunity to discuss together.
Yeah, absolutely. Yeah, I mean, we've been discussing it for now 5 years, all more than
Yes.
5 years. Uh, there is always something new every week that market brings us. So there is always, I mean, it's always fun to spend a couple of hours, maybe almost 2.5 hours every week to go through this. Okay, I'm not gonna go through all the names. Anyone else joining here for the first time? All right, looks like I see one raise. GP. What brings you here, GP?
Yeah, I just started looking at the stock market like couple of years back, and I just like started identifying some opportunities to invest. So I just wanted to like get together with other people and see if my understanding and thinking aligns with like other professional investors and just like some venture into the investing space.
Sure. And what kind of investing are you focused on? I mean, we have a different type of folks. Generally on the meetup, there are some who are day traders, there are some who are traders, there are some who would want to buy businesses and not the stocks. So what kind of what's the
So
area that you're comfortable with?
yeah, so currently I'm into stocks, not business side. And for the last 2 or 3 years, I've been investing long term, like buying, identifying when a company is at a like a fair value, like a
Okay.
dip now,
Okay.
and starting to venture into maybe option trading as well. But that's a future
Okay.
thing.
Yeah, I should have clarified when I say business, I mean when you buy a stock, you actually buy the business, right? I'm not talking about buying a private business. My
Mhm.
focus was, I mean, I meet a lot of investors. Some investor will say, I want to focus on the stock price. When I say business, means you want to focus on the business that company is in. Then you talk about the stock price. So it looks like you venture on that side where which is let's find what's the fair value is and
Yeah.
not just buy because the stock price is moving up or down.
Yeah.
Hmm. All right. I think yeah. Anyone else, if new one want to introduce themselves, please raise your hand and introduce yourself to the group. Otherwise, then we'll get started. No one else. Cool. some other folks will join in. Let's get started. Good morning, good afternoon, everyone. Welcome to our weekly discussion about the markets, about the stocks. As always, I'll bring some things that I see in the market and some of the things that you have requested in the previous meetings, and hope to have some good discussions around investing. So for those who are new, I've been meeting here for more than 5 years now, every week. Saturday, unless I'm traveling or tied up somewhere, we'll just show up here. Right? And me personally, I focus on buying great businesses, right? And of course, if I can't buy the whole businesses, so I'll buy a portion of businesses, which is through the capital markets. That's where the stocks come into picture. Is I can get small stakes into a lot of businesses that I'm interested in, and so my focus is on a long term build wealth by buying great businesses. But since this is the only source of income for me now, I used to work mostly in the tech field for 25 years before I decided to become a full-time investor. I do use options, etc., to generate some cash flows. Right? So that's my quick background. So let me go through some message. Sam says, I bought some shares of the stock I sent you. What did you send? Did you send me something? Oh, Sentinel. Okay. Sentinel-1. Yeah, Sentinel-1. I mean, I have earlier looked into Sentinel-1, but I'm no longer in Sentinel-1. For me personally, I own CrowdStrike. And Sentinel-1 is basically a CrowdStrike for small and medium business segments, right? So that was their pitch. But with CrowdStrike coming up with Falcon Flex, and they have another platform which is targeted specifically towards a small and medium business segment. So I wasn't sure how Sentinel-1 is going to fight against CrowdStrike, which is much bigger player. So hope, Sam, you have done some study to know what Sentinel-1 board is, and how will they be able to stand against CrowdStrike's?
Well, I thought someone would just buy them out.
Oh, someone will buy them out?
Don't you think? I mean, someone said that they had a distinct, they're the only competitors. They said CrowdStrike and Sentinel-1, and that the Sentinel-1 doesn't know how to address its competitive advantage.
No, I mean, so Sentinel-1 has gone through a lot of history. The whole idea was behind the investing thesis behind Sentinel-1, let's say a couple of years ago, was when the cybersecurity was becoming hot, right? Zscaler, Sentinel-1, CrowdStrike, Palo Alto Networks. These all were like super hot during the COVID time when everyone was working from home and adding whatever gadgets they had onto their networks. All the companies went, overdrive to protect the networks. And Sentinel-1, their focus was more on a small and medium business segments, which CrowdStrike was not addressing at that point of a time, whereas CrowdStrike was focused on much bigger enterprise customers. So Sentinel-1 had grabbed that market, but CrowdStrike, I think it is 23 or maybe late 2022, came up with their own products, which is geared towards small and medium business segments, in which they don't have to spend a lot of time and energy and cost of selling to them. And I don't know. I mean, I have not figured out why Sentinel-1 and not CrowdStrike. There is generally a tendency that I've seen, including myself and other investors also, is, hey, I missed number one. Let me focus on number two. I could not invest in Coke earlier, so let me invest in Pepsi. So sometimes Sentinel-1 also get a love from investor, those who feel, oh gosh, I missed the boat on CrowdStrike. So let me get on to something which is not that expensive. CrowdStrike, if you look at, again, this share price individually doesn't matter, but overall, if you look at CrowdStrike is now $116 billion market cap company, right? And Sentinel-1 is $6 billion, right? So sometimes there is a tendency of, oh, CrowdStrike is too big. Let me go and look at the second best player. and think that some part of a time it will become CrowdStrike. I don't know. I have a mixed feeling about this strategy, right?
Vivek, that's what I did 25 years ago, and I bought HP. My mom said, don't time the market, so I bought HP at 40. And you know what happened? They
Yeah.
got rid of Herd, and it's barely caught back. Maybe it was the dividends, but
Yeah. So sure. And Jose has a comment, a fairly valued number two can have more room for growth. Right. I understand. But sometimes we are seeing that investing in number one, the leaders continue to grow, right? And continue to crush the competition. So I'm not like very adamant on either side of it, but sometimes this works, sometimes it doesn't. Just don't. What I'm not in favor of is investing blindly just because it is number two and we are looking at number one and saying, oh my gosh, it's got a so room to catch up. If I now look at Sentinel One, it's $6 billion. And if you look at a CrowdStrike, it's like $115 billion, right? There's a lot of room for growth. May not be. It may or may not be. So for that, you really need to look at what the Sentinel One does. And I don't like the numbers that I'm seeing, right? Especially right now on Sentinel One. They will continuously need a ventilator to live. Let me look at a CrowdStrike. By the way, CrowdStrike had reported earnings, right?
yeah, my brother-in-law, back like 20 years ago, they had the first Wired exposition, and so so I went to CrowdStrike, and that guy was totally unimpressive. Well, look how far CrowdStrike has come since the recession, 4.5 times.
Yep, yep. All right. So I think, yeah, Jose says it has to be a good company. I agree. We have to find if the business is good or not. Doesn't matter. Sometimes that when you have the market is in euphoria, when the rising tide is there, it will lift all the boats, including number twos who are not that great, or number threes and number fours, like we've seen in 2021. But when the tide goes out, then we know who has been swimming naked. Unfortunately, Sentinel One was caught swimming naked, and right now they're having a tough time in justifying the prior valuation and competing against them. Anyway, what else? What else? Let's not spend the whole session just on Sentinel One. Anyone else bought anything? Any new stock that we have not talked about here before? All right. Okay. So Ravi says, good morning. Good morning, Ravi. Good to see you here. All right. So today, what do we have on agenda? Let me see if Aditya is here or not. Not yet. Oh,
Good
Aditya is
morning,
here. You're
everyone.
here. All right. You are the first one on the docket today. I messaged you, right?
Thank you. Thank you.
Yeah. So today, apart from the regular discussions that we have, little bit on the macro side and the news and quick update on the crypto side, two topics that I have on docket today is one is to basically do a deep dive on two companies, and I know Aditya, you had requested for UNH a couple of weeks ago, and then last week I forgot who was that. Someone had requested for um XPENG, XPENG, call whatever, whichever way. So I'm gonna go a little more deeper into these two companies today. And of course, I'll start that. We'll also continue on our reading of ARK Big Ideas 2025. Like every week, we just pick two topics and review that. And I'm gonna pick up the two next topics from where we left last week. So yeah, so that's the agenda for today. Unless someone wants to sneak in or have a different thoughts. All right, let's get started. Before that, I want to make quick disclaimer. I I just got under weather a couple of days ago, so I haven't recovered fully. So might be a little bit of coughing and huffing for me. So please bear. Ravi says Lamb Research stock. So you have to give me two things, Ravi. One is market cap and who the CEO is. I will bring in the numbers. You bring me the story right? Investing is always numbers and the stories. So yeah, but you have to give me those two things. Okay, so let's dive into today's session. As always, we are here for some education and a little bit of entertainment, but it's not a financial, tax, or investment advice. So don't go and trade based on whatever you hear in this meeting. Right? We will talk about individual stocks. We'll talk about a lot of stuff, but that's not an investment advice. That's just to maybe stimulate your thinking so that you can do your own due diligence. With that disclaimer out, let's get some debrief from Aditya. So I know, Aditya, last week you were not here because you were attending a workshop in Anaheim. Why don't you give us a quick rundown? Because the similar workshop will be happening in Santa Clara, which I plan to attend. So let me see if will be a good use of the time or not. Go
Sure.
ahead.
Right, very well. Yes, so it was, I think overall, I'll give you an overall rating. Maybe I'll probably do that last 2 days. Similar format. I attended the one last year as well. That was an introductory workshop for options and, well, more like stocks and basic options. But this one was a slightly deeper dive. So they go into more detail. They spent about, out of the 2 days, they spent about 75 to 80% time on options, and they spent about 20% time on futures. So if that's something that anyone's looking to get into, then yeah, that's something. What I found, I think just for the audience here, I mean, a lot of conversation about just standard puts, vertical puts, covered calls, iron condors. A few new ones that I had not heard before. That I mean, I personally have an action to get into are like diagonal spreads. So apparently they're useful, so I need to check them out. I'd love to know other people's thoughts if they know more. And yeah, I'm looking through my notes as I talk here.
Okay.
So yeah, overall, I would rate the experience as, I think, and that this is just personal to me, maybe around 6 out of 10 in terms of the value I got out of the actual presentation. Of course, it was nice meeting people and asking the other guys in the other room questions about how to use the portal more effectively. So, yeah.
Okay.
And they also spend a bit of time going through the analysis tab, so doing a deep dive of that. One thing I wish they did more of, I wish they talked more about beta weighting and managing overall portfolio delta, but they did not. But then, very glad you've done that in your course, so I actually plan to go back to it and look at that in more detail.
Yeah, so I think that I have not many people actually talk about portfolio beta weighting and managing your risk by focusing on delta. So yes, I have covered that. On Thinkorswim, there is nothing much in terms of you just need to know how to get the beta weighted value for your portfolio, which is like 1 minute has. But I've attended it, I think 2023, or was it 2024 in Santa Clara? What I liked most about it is go and talk to other fellow investors. So I
Yeah.
plan to attend it
Exactly.
this year also and make some new friends, right?
Exactly. And I found people like who were looking into, I mean, like new, like algorithmic based trading. This thing called Option Alpha. It's a
Yeah.
bot service that helps you trade. I haven't personally looked into it, but there's always sort of other more interesting or adventurous ideas around which I personally haven't pursued. So yeah.
All right. So anyone else who, if you're attending similar event that Charles Schwab is doing in Santa Clara, it's on July, I guess 11th and 12th, I'd be an opportunity to meet you guys in person over there, right? Okay, so with that out, let's look at what happened in the market. Overall, and I know, I think that the biggest thing that you may have in mind is when I'm going to talk about something that overshadowed everything else in the market, right? Tariff, job, labor market report, concerns around Fed rate cuts, etc. None of that mattered for at least, I would say, a couple of days in the market. There was something else going around in the market, and we will look into that as well. But yeah, those things are crazy. We had some crazy stuff. Anyway, so we did have, labor report came out. So U.S. economy added 139,000 jobs, slightly above expectations, right? So the economy, labor market is tight, but not too bad, right? And the unemployment rate is still 4.2%. So we have a slow hiring and slow firing, not a big change. So, but thing that did not turn out to be good was, like, I've seen it multiple times. The previous numbers they get revised, and now the previous 2 months, it was the revision was on the downward side. So don't rose your hopes too much right now for the numbers that we saw for May. Who know, by maybe a month later, this number could get revised downwards. And also the labor force participation continues to decline, which is, of course, we have a tighter immigration policy now. So these are the numbers. It's still lower than where we used to have in terms of normal addition, but still higher than what we consider as economists consider as a break-even growth rate for employment for your labor force, which is maybe close to $100,000. So it was a great news. Market was positive when this numbers came out, and it doesn't matter. Sometimes we will see if the numbers are good, markets would sell off. This time the numbers were good, so good for economy was good for market. Sometimes we will see good for economy is not good for market, right? So we don't know what the market's gonna do in any one particular on a particular news item. So don't trade based on just the news events, because it's almost impossible to predict which way the market will go. And shouldn't be surprised, the market, we did a V turn in 8 weeks, right? This is where we started on April 7th or April 8th, when we had the whole tariff announcement, and the market sold off. And now not only we had a huge recovery, but we even, we shot higher than where we were when the Liberation Day was announced, whatever, April 4th, right? So still we are a few percentage points lower than the all-time high. But 2 weeks ago, who could have thunk that we will have such a strong recovery? I have no idea. And looking at, and if that point of a time, if you focus on and read through the financial media or look in the commentators, and there are many talking heads, lot with much fancier degrees, talking about why we should raise cash, wait for opportunity and all that stuff, right? Trying to time the market just doesn't work. And this is one more example of why we should just focus on buying a good businesses and hold it for a long term than trying to time the market and sell when the market is going high at a hope for maybe I'll buy it at a cheaper price a little later, right? And if you sold after the Liberation Day was announced and the market had whatever the huge sell-off that it had, it's so difficult to get back right now. Markets are up, what, 25% from the lows of those April. Whatever you might have thought earlier that I'll get back into it, it's not easy. It's not easy now. If you have sold off at 500 now to go back and buy a SPY at 600, So don't even get into that game. World market is actually doing even better, right? US is whatever, we are still close to 2% gain year to date, which is not bad given that we had 26 and 24% gains in the past 2 years. But overall, the rest of the markets are done even better than US, except Japan. This is the year, at least so far, where the ex-US, which hasn't worked for last 15 years, is now working after a long time. So if you have exposure to EFA, ETF, or EEM, let me not say EEM because that's plagued by China, but let's say EFA, or I think there is an ETF called All World Index ex-US, probably been pretty good. Latin America has been doing good. Before I pulled this, I did not know that they're up like 24, 25% for the year. Right? Europe, ex-UK, almost 12%, I think largely driven by Germany. Once Germany announced the investments into industries and all, the German stock market and FTSE was through the roof. And Asia, UK, not that bad either. So is it the end of US exceptionalism? I won't write that off so soon. And of course, I think there are some concerns around how US, the government and the leaders on the US have been irresponsible in terms of the fiscal stuff. As we're now passing the bill, which is going to add another $2 to $4 trillion of debt on our balance sheet, on government's balance sheet. Come on. That's not done. And so, but it is where it is. So I think other markets are done pretty well. Is on the US side is all based, whatever the rally we saw is based on multiple expansion? Probably not. Some of it is yes, but we also saw corporate earnings also have come out better than what we were expecting collectively. So we just almost finished, let me put it that way. I think this week there are a couple of big companies which are still reporting earnings, but for all practical purposes, I will consider Q1 earnings season is over. Now we can focus on other things. But the companies have grown their profit 12.5% year over year. Despite all the stuff that we have heard, the company's profits have still grown in this quarter. Right? So, earnings growth, we're getting earnings growth. We probably will get these tax cuts. The tax cuts will continue to be there. And third is maybe we'll get a deregulation. And fourth is the Fed rate cut. These are still the tailwinds that we haven't seen. And of course, Q1, I think a lot of the Q1 stuff, the growth in Q1 may have been pulled forward from Q2 because the companies would have started to order more to, basically bypass the tariff. Before the tariffs come in place on July, the companies would have front loaded their orders, etc. So that may have to do something with the great Q1 results that we have seen, right? I agree there's some portion of that maybe because of front loading or pulling in the demand before the tariffs. But overall, I think the lot of growth that we saw came from technology, communication, and the consumer discretionary, right? Which accounts, all these three sectors accounts for almost 50% of S&P 500. So at the start of a year and till maybe May, these sectors were not working that great. And if you recall some of our earlier discussions, tech and the communication services used to be the laggard when we look at the sector-wise performance. They used to fall under at the bottom, but now they started to go back up, right? So that of course has helped S&P post the gains that it has done. Looking ahead, we're gonna have some fireworks on Monday, hopefully. There is a meeting between DJT and President Xi around the whole tariff discussion and situation. And frankly, I don't even know like who is telling what, because from the US side, from administration side, we will hear there's discussions going on, we've agreed to talk, and then from a Chinese side, we'll hear something completely different, right? But hopefully, this Monday meeting is probably will happen, and we'll see what comes out of a Monday meeting. I mean, China is also playing a strong hand because they know US does need some of the rare earth metals that they have, not just the raw ones, but 90% of the rare earth metal processing happens in China, right? And our automotive sector needs it. And I read somewhere that automotive CEOs have approached Washington and saying, guys, you need to get us out of this soup, because China is not giving us those rare earth metals that we need to build our cars, right? So I think the both are equally strong, while with some of the other countries like Vietnam and UK, etc., US was on the stronger side. But I guess when it comes to China, you can't just use the same playbook.
Excuse me, Vivek.
So, yeah.
Why does China have to sell U.S. Rare earth minerals? It's like Trump feels he has God-given right to them.
Where else? So China is also having their own problems. Their the demand from the consumers has gone down over the last 4 years. China has not been doing well. The real estate market has blown up in China.
I
Consumers
agree with
is
you.
down in China. So they also need they're also in equally bad position. And now if US adds more tariff on Chinese goods, their business will start to blow up. So I guess both of US and China have their problems as well as their own strengths, right? We can't just roughshod China like we have tried to do with other countries. And I think both leaders are equally strong in their own respects. Xi Jinping would not want to look weak in front of his constituents, and so is the case with DJT, right? Who has his own way of negotiating it. Hopefully, I guess things will not become worse, and both the leaders will do something which is sensible for both the countries. Right? So that's on Monday. Then we have July 9th. There are a couple of things on July 9th. One is expiration of 90-day pause on reciprocal tariffs. And then also the 50% tariff that we had earlier announced on EU, that was then, put in abeyance until July 9th. Then on August 12th, we have an end of China's 90-day pause. And I think after a few things, we will forget which pause is ending when. There are so many different things happening. More closer, June 18th, we have a Fed meeting. I shouldn't say on rate cut, but basically shortcuts. FOMC meeting that's happening on June 18th. DJT is asking for 100 basis points cut. We'll not know if we'll get any cut or not. I think Jerome Powell has done a great job in maintaining his equanimity and repeating the same sentence. He does it after every FOMC meeting is Fed is data dependent. Right? Even though they are late in on the data side, but it still maintain the same consistency. Administration feel that Fed is falling behind. They are late as usual. They were late in raising the rates. Now we feel that they are late in cutting the rates. There is maybe some truth to it because EU has been cutting the rates, after every meeting, but we did one last September. We did 50 basis points, and surprisingly, the mortgage rents went up after that. That's a different topic to discuss. But yeah, these are the few things I think which could be a market moving events. Next Monday, then we're looking at June 18th. And there is, I think, another meeting on July for FOMC. I don't know what the date is, but so we could see more than usual volatility in the market. What else happened this week? Lululemon. Who wants? Looks like not many people wants $100 plus yoga pants. So Lululemon shares was like plummeted 20% on Friday. And this is Lululemon is a little more on the, call it as a luxury athleisure, right? So they raised their guidance was lower than what the market was expecting, and also they trimmed their full year forecast. Again, the whole reason given by management was that Lululemon is a discretionary stuff, right? If I,
Vivek?
yeah,
Yeah, sorry, I'm not typing in a chat. I'm driving, so I can't type. But quick question about Lululemon. Are they saying anything about tariffs, and that's the reason that their prices are higher and the sales are down?
I mean, their prices have been higher even before the tariffs. What they are
Right. So you add 30% to that, and it really becomes ridiculous.
Yeah, so what they did say that the consumer is cautious, and I think I don't have the Michigan sentiment survey, but even the Michigan survey also consumer sentiment was little it was lower than what they were expecting, and if consumer sentiment, if you're not feeling that great about the economy, you will cut down on some of the discretionary spending, right? So while the Walmarts and Costco's and the other retailers will prosper, because hey, you need those things, you will probably cut down on buying $100 yoga pants, right? I will go to Costco and maybe buy a $20 pants right now. So we also saw, again, I don't have that, but I think on the dollar, was it Dollar General or Dollar Tree?
Dollar General.
Someone has reported earnings, and they had mentioned that they saw a growth from the segment of the consumers that make more than $100,000, right? So now those consumers who make more than $100,000 are actually started to shop more on the Dollar General side. So that should tell us something about what the consumers are feeling. And maybe, we want to, maybe consumers overall getting little cautious on, I don't know, will I have my job or not? Maybe the tariffs are going higher. The companies are still not hiring that much. I mean, we had 135K jobs added, right? But still lower than what it used to be. So I mean, that may have something to do with the Lululemon. Right? Other big market movers was Tesla, and that is for the silliest of reasons, right? That was Thursday, right? The whole Twitter was blowing up with back and forth. Was it Thursday or Wednesday? What was that? Which day was it?
I think Thursday.
That was Thursday. Yeah, the whole
It was drug related problem.
yeah. So it was whole blowing up between back and forth between the president and Elon Musk. So eventually the bromance between the two buddies is over. And I would say I'm not surprised, because I think when both of them got together, we have talked about in close circles, saying both the leaders are very strong, both are hot-headed, and you cannot have a two strong leaders, at equal positions, right? One would want to, they will both try to basically make sure that they prevail. And with both the leaders very strong, it was bound to happen. What surprised me was it happened so soon. I thought at least they will work together for a year before we see this fallout. But I guess I was wrong on the timeline side. But in any case, I think I'm with Elon on this one. If the real reason is what he's stating is this big and ugly bill, and which continues to add trillions of dollars to our deficit, and which is completely U-turn from what Donald Trump had promised when, as a part of his election manifesto, which Elon had supported, and maybe now he's feeling that he was taken advantage of and he got stabbed in the back.
Can I say something about this?
Sure.
This is Serena. Hello.
Yeah, good.
Okay.
Take a minute.
So I think there's some confusion here. Like this is a reconciliation bill. It's not a budget bill. So the place to allocate funds is not in this bill. It's actually in the budget. So there's two just separate purposes.
Great. Maybe in technicalities you're right, but isn't this is going to add whatever $2 to $5 trillion on the deficit? Put it under whatever category it is.
Well, if you don't do that, there's a lot of tax cuts that were enacted that would go away.
Correct. Yeah, that's the reason which is given is if you don't do it, that the tax cuts that were enacted in an earlier term will go away,
2017.
which will add basically cause more harm to the consumers, right?
Yeah.
That was the reason why I want to push in. But whenever there is and it's not the first time we have seen it anytime that whenever there is anything that needs to be passed urgently, Congress, men and women, they'll take advantage of it to sneak in what else they want to sneak in. So anyway,
but I think there's I'm not sure why Elon is acting like this because it's just not the right venue for that.
I agree. I completely agree. I mean, it looks like two high school friends are just fighting out in the open for the rest of the world to see.
Yeah.
So I don't completely agree with the mode of protest. Number two is, Elon, you want to take your fight? Go and fight as a private citizen. You are a CEO of a company and you need to think about the shareholders whose money you're using. So I don't agree with the mode of what he's doing or how he should do it as a private citizen, resign from the CEO of a company and take your fight wherever you want to. As a CEO of a company, I want my as a shareholder of a company who has given money to the company, I want my CEO to be focused on enhancing shareholder returns. You want to look for the overall benefit of the nation, which is the right thing to do it, or not as a CEO of a company, right?
I don't think he's doing it as a CEO, but I think the main issue is that, I don't understand why he's not seeing the difference between it being a reconciliation bill, versus a Congress spending bill.
Yeah. So in any case, I mean, there was a back and forth, didn't like the bickering, but what that caused was a huge volatility in the Tesla stock. At some part of a time, the stock was down 17% for no reason. So this is what you get. Tesla is closely tied with Elon. You got a key man risk. There are some companies, some other stocks where you have those risks. You need to be aware of those if you're investing in those companies, right? A lot of a company valuation is driven by who the person is and closely tied to it. So this is what investors will call it as a key man risk, which showed up in the Tesla's stock movement. It had nothing to do, all the discussions had nothing to do with Tesla business, but just that market was thinking, oh my gosh, we are having Elon fighting with the most powerful person in the world, being a US president. That's not good. You shouldn't be doing it. And the stock sold off. Then there was some news that maybe on a Friday they'll have a patch-up call. Probably didn't happen and all that stuff. But anyway, a lot of volatility in the market. And if this gives this incident also tells you that if you're a Tesla shareholder, the board is not with you. I mean, there is almost no governance you cannot expect any corporate governance from Tesla board. Tesla is Elon's baby. As long as Elon is doing good, Tesla is continue to do good. If Elon doesn't do good of market things, Elon has gone crazy, the stock will get punished. So if you are investing in Tesla, despite all the reasons of I'm investing in because it's an EV company, some says it's not a car company, it's a software company, or maybe I'm investing in Tesla because I'm bullish about robotaxis, Optimus, battery storage, whatnot. Please add one more item. I'm investing in Tesla because I like Elon, or because I'm bullish about Elon, I cannot go against Elon. I think this week showed us that the dependency on one person is maybe a lot more than what you personally might have been thinking about. So position sizes accordingly. Then don't think about nothing has changed in company business. No announcement why my stock has gone down. That's what we saw in Tesla. And Tesla being a part of a Max 7, I mean, it was like $1 trillion plus company, and you're down like $150 billion. It's a huge down move. And for a Tesla shareholders, there's nothing you can do. You can just watch the drama. I mean, I watch the drama, take a popcorns out and see how this is going on. Anyway, with another news on Tesla is there is supposed to be a robotaxi launch. I think it's June 12th. We will launch in Austin. We will see how it happens. Now, I think all the bets are off. I don't even know if maybe Austin regulators might come and put a wash on the whole robotaxi launch. Who knows? So there's a lot of uncertainty on Tesla right now. Other stuff. Mercado Libre was down 5%. Still a great company, but the stock was down because they lowered the threshold of for free shipping from in Brazil from a 79 real to now 19 real. So if you order a goods worth 19 real, you'll get a free shipping. This is because they just want to crush the competition, which mostly coming from a Temu, Shein, and Sea Limited. So short term, there will be margin pressure on it. But if you recall our discussion on Melee earlier this year, they had indicated to the market that they're going to spend $4.5 billion investment in Brazil to capture the market share. So I would consider this is one part of that investment, right? That you're going to invest more in the logistics, take more of the cost on yourself just to capture the market. So I'm not much worried about this. I think this is still no change in thesis on this company. I still like this company. And you guys know this is my biggest individual stock position in my portfolio. The biggest one is the ETF SPY. This is the second biggest one, individual stock, which is Belly. So it was close to $2,600. Not, not much change anyway. So not worried about that. So at the final day was around an S&P 500 on Friday. Market was expecting that we might have a changes in the constituents of S&P 500. And these are the companies which some experts, and no one knows which companies were in consideration, if at all, on the S&P 500 committee. But there are guesses that market will put forth. We had a Robinhood, Vertiv Holding, AppLovin, Interactive Brokers, and I think there was one more. I think there was a Carvana or something. And eventually nothing happened. They didn't make any changes to S&P 500. So, sorry. We'll have to wait for maybe, I don't know, is it a quarterly basis they do it? But it's fun to see, some of the retail influencers having what I call live streams and looking at Robinhood's and the SoFi's and the AppLovin's chart to figure out how the tick by tick chart is moving and generating the whole excitement about is getting into S&P 500. If you really look into some of the studies that I've shared here earlier, over long term, the stocks get an initial bump, but then they lose all that initial bump and all the excitement that was built into the stock over 12 months period. So don't just go and buy the stock because now it's been included in S&P 500, right? Or once it got included in S&P 500, there's a lot of expectations that start to build in, and some of those stocks are got already pumped up. Right? So if you didn't like the business of the company before it was an S&P 500, there is no reason for you to go and own the company now just because it is in S&P 500. And I understand the whole logic of passive inflows coming in S&P 500 and all that stuff. Maybe just buy S&P 500. Right? Don't buy the individual companies if you didn't like the business. But if you are one of those swing traders or want to do event-based trading, maybe. But then what could happen is what happened this Friday was if you had bought a lot of either the call options or the stocks getting into this event and nothing happened. Right now, all that basically is of no use. Sector performance, looking at over industrials. See, the old economy has been doing good. Industrial, utilities, communication is back up. Staples is doing good. What is not doing good is consumer discretionary, and within the consumer discretionary, what's not done good is automobile and luxury goods. Right. So there we know how the consumer is feeling about. If you're a little bit concerned, you're gonna push out any big purchases like automobiles, etc. And your Lululemon pants can wait. Your Gucci's can wait. I did not think that the super luxury consumers will be impacted by it, but if you look into on the European market, in fact, the Louis Vuitton, etc., they are also feeling the heat. I thought those consumers are kind of, they don't feel this whole recession and all that stuff because they're in a different strata. But I was wrong. Maybe I think if you're a Ferrari owner, maybe those level don't are insulated from these tariff, etc. But maybe if you are Gucci bag owner or Louis Vuitton purse owner, you probably still feel the heat. So the luxury goods market overall is not doing good. Number two is also because of China consumers. China used to be a big market when it comes to the luxury goods, and with China economy not picking up, despite all what the government is trying to do there, not surprised that the luxury good market has not done that great. So that dragged down the whole consumer discretionary sector. And of course, the Tesla was down 17% on Thursday, and then it did recover a bit on Friday, but I think still it was down. Where did Tesla close on Friday? It was so almost from 350, now it's down to close to 300. It's still down almost 10% in 2 days. So that also will drag down consumer discretionary because Tesla falls under discretionary index.
Vivek,
so that's overall the sector wise. Sorry, was there a question?
A comment. I remember one time I was, I was definitely in the economy class, but they were selling luxury brands on the airplane, and I think this woman just pulled out like 2,000 RMB. That's about $300 to buy something on the airplane. I couldn't believe that. The airplane ticket was cheaper than was about 1,000 less, like 1,000 RMB. So I couldn't believe that.
There are individual levels different, overall economy is different. So yeah, there are some people who might still spend, But what we get in impact is the collectively
Excuse
what
me,
the
that was
market.
last decade. That was
That's
like
last decade.
yeah. So I haven't left the Bay Area. I'm poor now.
All right, let me go through some comments. Jose, that's a lot on China. China leadership far more sensitive to top 60% than USA. Luxury premium retailers suffering during economic downturns. That is true. US should not be cutting taxes with the increase in national debt. It seems the government doesn't care about the interest that you need to pay on this. So the politicians care about when are they going to get elected for the next session or not, right? We've been kicking the can down the road for years now. Right? We thought it'll be it's a blue versus red thingy. No, I think the last time when we had a balanced budget or surplus was maybe during the Clinton time. That's like once in a blue moon we had it, and after that we've been always running deficits, right? The fiscal deficits. So it's like I don't even know. I mean, if this government was an individual, right? You wouldn't want to marry them or marry your kids with this person who doesn't know how to spend and been racking up a credit card debts, right? But it's a government. Any idea what would be a fair price for Tesla? So you have to, so car wise, fair price would for me, looking at just the car stuff on Tesla, which I know Aditya, you will say no, Tesla is not just a car company. I would not be willing to pay more than $150 for Tesla. But
Right.
that Tesla is not a car company. There's a lot of a story behind Tesla, and now that depends on how big you think, because no one has any idea
Right.
of
Right.
what exactly the market will pan out to be on robotaxis, on Optimus. We've been hearing stories in every quarterly meeting from Tesla management, and then on one side you also have Tasha from ARK Invest, and she will have some ridiculous TAM and SAM size, and how much Tesla can grab. Yeah, so the truth lies somewhere between what the Tasha's where the ARK Invest is in and what the lowest valuation is, which no one knows. So
Right.
you may have to just if you're and here's the thing, if all the things that we're thinking about Tesla and Optimus, like there'll be millions of Optimus, there'll be a million robo taxis which are supposed to be there by 2020. Maybe the first one will roll out on June 12th. And eventually, if that happens, then whether you buy it at what is the 300 the stock is today, or you buy it at 270, it's not really going to make a big difference. If the stock is going to go to 500, as Dan Ives predict, then does it really make a big difference that you bought it at 270 or 300? Not much. Right? So I don't know what's the net would be. I mean, Adam Jonas
Yeah.
was very bullish about Tesla, right? ARK Invest is very bullish about Tesla. Then Ives is very bullish about Tesla. But these are the folks who have always been bullish about Tesla.
Right. Right. Yeah. No, it's a hard question, and I find myself pondering if I should consider some sort of a long-term leap sort of a strategy on this thing. But yeah, it's just a thought. There's not much behind it.
Yeah. So I own some of Tesla, but I'm 100% aware that this stock is gonna stay volatile, and if it becomes like I think was it this quarter meeting, he told that Tesla will become the biggest company market cap in the
In the
world,
world. Yeah.
or
Yeah.
was it the previous quarter? And like by
Probably,
far,
I remember the comment. Yes.
yeah. So who knows? Who knows what the truth's gonna be? So. Market, I think the position sizing is a lot more important when it comes to companies like Tesla than trying to nail down the exact price at which you want to own.
Right. No, thank you. Thank you.
Whereas, Jose says 220 during tariff crash. Bear market. Look at the trajectory it took in 2022 and 2023. Yeah, I mean it's still below its 488, what we saw after. This is like after this was what, 80% growth after the election results were announced. Tesla was like, oh, what the heck? Just because now we got a DJT in the White House, Tesla was up like so much. Anyway, so it's given up a lot of it. Again, I will be, for me, I mean, if I'll probably be okay to buy or add some more at around 250 to 70, 300-ish, between 250 to 300-ish kind of a range. Again, this is assuming that all these Optimas and everything will come out to be true, and I don't look like a schmuck that I did not invest in it. It's a little bit of my schmuck insurance. Fear and greed index still on the greed side. So I'm still being cautious. What did I buy or sell this week? Again, not a recommendation, but I do share so that you guys know what what do I hold in my portfolio. I bought a little bit of XLE because no one the whole energy sector is been down because of the OPEC and all that stuff. But I do want to hold energy in my portfolio from a just because I want to have a little bit diversified portfolio. I don't want to add any more AI related stuff right now or the tech right now. I have enough of it already. So bought a little bit of XLE and bought ICSH, which is basically waiting for markets to give me better opportunities and get some cash to find a better place for a cash to deploy it. So those are the only two things I did. Didn't sell anything this week.
Question about ICSH. So typically when trading options, you can literally, if you just sell ICSH, you can literally instantly reuse that cash for an option trade, right? Or do you have to wait for settlement the next day or something like that?
Most of the brokers will give you. I think it may also have to do with what kind of again, I'm not sure. But for example, at least for my accounts, if I sell, etc., the capital is available immediately for me to deploy.
Okay.
So some of the brokers will tell you that this is your cash balance and this is your settled cash balance. So right now, for example, if I sell $1,000 worth of ICSH, my cash balance will be 1,000, but the settled cash balance may still be 0 because the trade has not settled. But I can still use that 1,000 cash balance to do another trade. There are some I've seen. I think there are some tickers on which you may have some restrictions because I've seen when I'm trying to buy I think maybe a Bitcoin ETF on Fidelity, or maybe was it some other ticker, it will tell me, hey, if you're buying this, you can't sell it, or maybe if you sold this, it has to settle before you can utilize it. So I think it's different. I don't think there's one answer to it. But at least I have seen some of my brokerage accounts is, let's say even if I do an ACH transfer, it will immediately give me the credit of whatever that ACH transfer money I'm trying to transfer, and I can use it while the ACH transfer happens in the background.
Yeah, thank you.
Robinhood cover. Okay, so Jose says Robinhood will give you immediately. Okay, so maybe has to drop. So that's all on the Robinhood market side. Let's look at quickly on the crypto side. Not much change. I think Bitcoin had its own, crypto also sold off when the overall market, because of all the tantrums, was down, and then it recovered back. I think it was down to, Bitcoin was down to 101K. Now it is back to 104. Been range bound between these. Let me just pull up the latest one. Coin Gecko, like 100 and 109K. So and I like it. We get boring. It's been between this range since December, I guess. Right? Very pretty tight range between 110K to 80K or 90K. Okay? So that's nothing much on the crypto side. There is some story on the crypto side which we would want to talk about, interesting ones. And also there's a lesson to be learned in the same stories. So I think I do have that one. The biggest news which actually came out in the crypto side is Circle, company, which is an issuer of a stable coin USDC. That started trading on, I don't know which exchange it listed, but it's recently IPO'd, and it started trading on exchanges. The IPO price was $31. It was hugely oversubscribed, means there was more demand for the shares from Wall Street firms than the shares available. It opened at close to $69. So if you were one of those lucky fellas uh, who have friends in investment banking and you were able to buy at 31, and when the market opened, you were already up twice. And then it surged to an intraday peak of $103. And then next day it was like 123. So this is like crazy stuff. This reminds me of, those .com days when the IPO comes in, the stock is up 100%. That's exactly what happened with Circle. And I know Kathy Wood bought a tons of stock on Circle, and I think it closed at what? CRCL. But apart from, so it closed at $107. It still is a huge, I would say, I don't know if it calls success, because from a company perspective, it's not a success, but I would say it's a huge success in terms of IPO market has opened up again, and there is a investor interest in buying new companies. Specifically on this one, it does validate the fact that there is a demand or interest now, since we have a stable coin and the genius bill working through through the Congress. This industry is gonna get legitimized. Industry is gonna get taken notice of, and every big bank wants to be part of it, including JP Morgan, Bank of Americas of the world. So I'm not surprised that there's a lot of interest coming into the share price of this company. Now, is it worth this? Who knows? When I look at the numbers on this one, the only way they make money is through the interest income, right? So I think it's right now, it's just a fact that you have another pure play crypto company in the market apart from Coinbase. Now you got one more company which is exposed to crypto, and if you are a fund, etc., want to get exposure, I think probably that is driving the demand for it. Some demand coming from stable coin regulation, etc. But I personally expect that this should cool down, and if you're really interested in it, probably you will get much better pricing if you can just wait and not give into FOMO. Right? At the end of the day, the business of this company is that basically they receive the money from users of USDC. They get the USD. They will basically buy treasuries or an assets to back. They'll deploy the USD into liquid assets. Majority will be US treasuries, maybe some corporate bonds, etc., and then earn interest on that one. I haven't yet seen more adoption of stable coin in our day-to-day life, right? You and I, if we are not trading on decentralized exchanges, etc., right, we won't even bother about all the stable coins. So, but I think those days probably will come sooner than what we were when the market was expecting, maybe a year ago, because the administration is pretty favorable to this.
Vivek,
I think that's what is driving all this craziness. But I
uh,
would say it's a spectacular turnaround for a company that had a failed SPAC attempt. So it wanted to go public through the SPAC route in 2021 when the SPACs were hot, but just because of we had a regulatory concerns and the hurdles, that didn't go through it. But I would say, good for the CEO. He's now a billionaire, Jeremy Allaire.
Vivek, Hong Kong's going stablecoin by September.
Yeah, I mean the other countries are ahead of it. We are a little slow in an adoption and all that stuff, but we are the biggest market, and that's what I think is driving the demand for this company. I mean, I can justify $123. So, and if you look at the numbers, they are not that impressive, right? You're making money through the interest payments that you're receiving, and then you also have to give a cut of that interest payment to Coinbase, where and the other exchanges where your USDC is being listed. So from numbers perspective, doesn't make sense. But then when someone wants exposure to pure play crypto company at whatever cost, it will just push up the prices. The other thing is now I read that I think the Gemini or the Kraken, they're also now planning for IPO, right? Strike the iron while it is hot. Right now, the participants in the market, they are clamoring for any crypto exposures. So why not? Let's go IPO. So I won't be surprised to see few more companies coming IPO on the crypto market. What else? Trump media plans Bitcoin investment. They raised $2.5 billion capital. Their plan is to buy Bitcoin. I don't know when and what. There was another one. I don't think we talked about it. It's called 21, which is a collaboration between SoftBank and what other company? And Jack Mallers is who's the CEO of Strike. Basically, will kind of allocate the funds on that one. So they're planning to raise what, $21 billion to just buy Bitcoin. So there's a lot of companies who are not trying to figure out the micro strategy. What they have done is maybe just buy a whole Bitcoin treasury to shore up the stock prices. Didn't work for GME though. GME announced that they're gonna buy Bitcoin worth whatever $1 billion or whatever that was. The stock popped and then the stock dropped. So, but I see a lot more companies trying to copy the MicroStrategy route and coming up with an announcement saying we're going to buy Bitcoin and put it on our balance sheet, hoping that their stock will also do what it has done for MicroStrategy. But more than that, there was another nation, they announced that they would want to hold Bitcoin as a strategic Bitcoin reserve. So I think Bitcoin 2025, there's some announcement from Pakistan saying they would want to buy some Bitcoin and hold it forever. I also know that later on, I think some other officials told, no, there was nothing such that we're going to do. Who know what the truth is? More interesting stuff though, it is hyperliquid. So hyperliquid traders suffers $87 million loss in 5 days. And it's I would say the paper loss because this trader called, I don't have the name. What's the name? James Wynn. I think it's James Wynn. And he's been known in the circles to take, huge bets. It's not his first foray, but he's been known in the crypto circles, to get a good leverage and trade on exchanges, which provide you like 100:1 leverage and all that stuff. So, and he's been active on those meme coins stuff. And so he bet big on these Pepe coins and some of the other meme coins. And some part of a time, he had $87 million in profits, right? unrealized gains, $87 million. And then we had this weakness in the market wherein, Bitcoin also fell down, and he was leveraged, like, I think this particular trade had some 40:1 leverage. And then when you're trying to build up that leverage and you're trying to, play in the market, there will be many more traders who would want to take advantage and try to liquidate you. I'm not sure there was anything nefarious involved in it, but just that the market itself sold off over past few days. And when you're 40:1 leveraged, 2.5% down move is going to wipe you off. That's what the leverage does to you. And now there are different, if you look at a media outlets, there are different numbers being floated, that from $87 million in unrealized gains is now at negative $20 million. Some says it's only $13 left. Who knows what the truth is? The idea is not to focus on what the real number is, but again, leverage cuts both ways. And this is not an isolated incident seen in traditional financial market. In crypto market, it is more prominent because you can get much, much bigger leverage than what is available on the traditional financial market. But yeah, if you're interested in this, maybe just Google about a hyper liquid traders story. You can get a lot more details on that one. And the final one is Google talked about the fact that the whole Bitcoin encryption, that we have to 56-bit encryption, that they're closer to cracking that encryption algorithm than what we may think. So of course, it's for the crypto economy or the crypto community, it's a huge, huge concern. But I think but crypto is overall what, $3 trillion? What's overall crypto economy? Global is only $3 trillion, right? I will be much more worried about the rest of the economy if you can crack this encryption, right? That means if this crack, the whatever the way they are trying to, if it falls into wrong hands, all your online internet activity is at risk. All your banking accounts, your credit cards, every e-commerce, your data with protection data, encrypted data, health data, insurance data, everything, anything that is online, anything that is not on paper is at risk. That will be much bigger worry for me than a $3 trillion economy. I think we will have a much, much bigger worry if we can crack that SHA-256 hash algorithm, which is, as of now, the backbone of all our encryption, where the whole internet traffic flows. And of course, Bitcoin will go to zero if that happens. But I think at that point of our time, I don't think I'll be worrying about, oh my gosh, what's happened to my Bitcoin? I think I'll have a much bigger worry about everything else. So I've not read through the detail of this one, but that did flash across my feed on Google's scientists were giving warning that we are much closer than what you might expect. Some security guys in our group probably can talk a lot more about it. Do we still have Satish? Yeah, Satish, what do you have to say about it? In your circles, you might have seen this.
Sorry, I was on mute. I don't have much idea about the bitcoins. I am very new to the stock market and bond market. I'm trying to learn.
Let me ask you a question. What will happen to the world if we can break SHA-256 encryption algorithm? That's what Bitcoin uses. And forget Bitcoin, a lot of others. You probably will know, right? How that algorithm is widespread in our overall community.
I'm a non-IT guy. I'm a MBA finance guy. So I'm not believing about this cryptocurrency. I'm not very much positive about the cryptocurrencies.
Sorry. Oh, I think there is another Satish. Where's our? My apologies. There are two Satish in the group.
Okay.
Right.
Okay.
So,
Who's our?
Vivek, I have just a little thing to share. I used to work for this large bank, and they were preparing for basically this quantum computing thing when they'll break SHA-256. So I think it's very clear in the industry, it's not a question of if, it's a question of when. So they've been preparing for it and have been investing in it. So it's just, I think a long time ago, I think it's a book by Simon Singh. I can't remember the cryptography thing, and it goes through the entire history of cryptography and this race between hackers versus people making the code versus people breaking the code, and right back to hundreds and thousands of years how they did it. So basically, it's a seesaw, and it is going to swing, and but hopefully, just they'll have with quantum that also be able to come up with a better way of encrypting these things. So yeah, just hoping for that.
Yes, on one side we're saying once we have quantum computers, we will break all these encryptions. On the other side, we can use then have a quantum encryption, which is not breakable.
Yeah. So just hoping that, but you're right. If SHA-256 breaks, we will have much bigger problems. Yeah.
That's my understanding. I'm not a cybersecurity guy, but
Yeah.
All right. I'll skip this one. Individual Bitcoin treasury opportunity we will cover next time. But let's go through two stuff on ARK big ideas. Then we'll cover United Health and XPENG. What we have 11:20 already. Let's focus on this business deep dive, and I guess we'll not have time for ARK big ideas today. We'll continue that in our next week. Like, what do you say? What do you want to vote for? Continue on. So today the topics that I wanted to cover on ERK was robotaxis and autonomous logistics. We can do it next time. Or we can do these two today. No votes, so I'll go with what I want to, but let's get into United Health. And then we'll focus on XPENG or XPENG, whatever it is. So let me bring up the United Health. So I never owned United Health. It only came to my radar when, and that's like bad way, when the executive was murdered on the street. I'm like, what this company is? Like who? Why would, I mean, I've never seen that kind of violence
Vivek.
in US. So let's talk about UNH.
Actually, I saw United Health about 7 years ago when they started sticking their name on the trains.
Oh yeah, I mean, I knew about the company. That's one of insurer, but I never owned the company, and I'm not their customer. And it's only when I was going through the United Health to prep for the session, I realized that Optum was one of my customer in my previous job. So we in fact interacted with the United Healthcare business segment because it was one of our customers. They were using our solution for data governance platform. So, so we were installed. Basically, they used our product. So then I realized, oh, so this is what the Optum is, the part of United Health. Anyway, so like let's probably 15-20 minutes on United and then another 20 minutes on XPENG. So we will go beyond 12 o'clock. And then if you still have energy, we'll open the breakout rooms and then you go and talk whatever else you want to talk. So what is United Healthcare? It's a Thailand global healthcare industry. Basically, it's got a United Healthcare Group has got two major businesses. One is a United Healthcare, which is an insurance company, and then the other one is Optum, right? So now Optum, so I don't have to talk about the healthcare because that's a like general insurance company, just like your Kaiser and your other insurance companies do. Optum was a little interesting to me because I don't see that often with insurance company is So Optum has got Optum Health, which has got a network of basically health providers, the clinics, physician groups, outpatient services. Then they got a Optum RX, which is a PBM, pharmacy benefit manager. Third division which they have is Optum Insight, which is basically offers a data analytics, consulting, etc., on the patients and the health plans, etc., everything, right? So I think while I was reading through it, I thought, oh, I think maybe we were interacting with the Optum Insight guys because they were all doing the data analysis and all that stuff. So why did United Healthcare became the big giant that it was, right? It was one of the biggest insurance company. Is the whole synergy between the Optum and United Healthcare was a cornerstone of its strategy. Right? Now you are an insurance company and you also own the network of clinics and all that stuff. So you know exactly what patients have and find out what insurance policies, how not to sell, or let's say you basically come vertically integrated. You have a 360 view of that customer, right? And then you can basically, once you have that information, you can use that to your own advantage. So the capabilities in data analytics, care delivery, pharmacy management, they're all leveraged to improve the effectiveness of the benefit plans, right? How does it make money? Healthcare, which is the insurance side, it's basically premiums, the insurance premium, and also for some of the administrative fee. So it looks like United Healthcare not only directly offer insurance, but there are some self-insured groups. They also offer them administrative services for managing the self-insured groups. And then finally, like every investment insurance company, once you receive a premium, you will invest in some assets, you get some investment income. Optum side, you have Optum Health, which gets revenue from patient care services, right? You go to physician, you pay, or your insurance company will pay. Then Optum RX, which is a prescription drug, and then the Insight, which is they sell the software and have a technology platform. So overall, that's at a high level, the breakup is a lot more money coming from the premium side. Overall, $400 billion revenue company. It's not a small company, it's a $400 billion revenue company. And I'll have a little more details on the financials of 298, 252. That's a breakup, right? So this is as of this trailing 12 months. Looking at trailing 12 months, pretty much like $400 billion, and it seems to be evenly divided between the insurance business and the non-insurance business. Right? Investment is only $5 billion, not much, but yeah, close to $400 billion, and that's been the case. So if you really look at from or a growth perspective, it's not a hyper growth business, but if you're performing at a $400 billion, even 10% growth is good enough. Right? From an operating income perspective, the Optum side is a lot more profitable from a margins perspective than the insurance side of the business. Right? So that was a good strategy of buying Optum and integrating into their operations. That gives them a lot more leverage against the other insurance companies as well. How many people do they serve? Maybe close to 150 million people, right? What do you want to focus on if you want to in business? Something called medical loss ratio, which is total money spent on medical claims and quality improvements divided by the total premium collected. Right? Now, this is where I get a little concerned about is that where the government comes and steps in and say this is what you can and cannot do. Now, as a part of ACA, Obamacare Affordable Care Act, government has mandated that you need to have a minimum of 80% MLR. Means if you have collected $100 in a premium, you have to spend $80 on the claims and improving the quality of the services, right? So if you want to, so your margins are already capped because the government is a big player in this one. Now looking at the MLRs, right? It's been not going in the right direction, right? So they've been spending from 82% all the way up to 85%. Government mandate is, I think it is 80%. That's what the Google tells me. Now take it with a pinch of salt, but that's Google tells me that ACA mandate is 80%. And I think that's also dependent on how big you are as a company, etc. So average is 80%. So seeing this, it means they are spending more on claims and the care than the premium that they are receiving. Looking at one way, you can say it is good because they're helping their customers. Number two, on the other side, you can look and say it's not great. It means they're not pricing the risk properly. Maybe they should have a better risk models to know what the claim is going to be and charge a premium according. So there are both sides. I'm just presenting a number that this trajectory doesn't look to be right. If you're an investor, if you're a patient consumer, yeah, this is great. Like competitive side, United Healthcare Insurance, the typical insurance companies are the competitors, right? Anthem, Cigna, Humana, Blue Cross, Blue Shield. From an Optum, they have so Optum again 3 divisions. Each one of them have their own competitors. The health side, which is a care delivery, physicians, group of networks, Envision and HCA Healthcare. There were PBM. Now you got Express Scripts, which is part of Sigma. Insight, there are other companies, IQVIA, right? And Epic Systems, which is, I think, the biggest player in EMRs, electronic medical records. And then these are all the IT services company who will build the systems for you. If I'm a healthcare provider and I need data analytics, I need a system to track, I should have the Palantir as well in this one, right? They're also getting big into the healthcare segment. So these are the competition. Key competitive factor is the sheer size. With the size, you got economies of scale. They were diversification because they are not only in insurance. The Optum provides another space which is not that regulated, so they have a little diversified. And of course, given the strength on the Optum's inside, they have a lot more visibility into the data and all that stuff, right? Here's an MLR comparison of other insurance groups, right? So we've taken out all the other income and expenses which is not related to insurance, and then showing it here. So from that perspective, I think the overall industry, I see the overall industry side itself is doing, except the Sigma, which is better than on the MLR side. UNH is still good. So I think when I look at this, I'm like, it looks like it's an industry level trend that government is forcing them to spend more on care as a proportion of the total premium that they are receiving, right? Now let's look at a financial performance. So I pulled in data for, as always, 1, 3, 5-year, 10-year, 15-year period, right? These okay gross margins, right? You can't expect the software level gross margins, right? And decent are return on capital, invested capital, right? Mid-teens, it's a decent even return. They also pay dividend, right? Dividend yield is, let's say, 1.5%, and been buying back shares, not too much, but add your dividend yield of 1.5%, maybe 1% as a buyback yield, you get a 2% per year of yield, right? And then, of course, your capital appreciation is different. Consistently operating margin. So from a business perspective, I don't see much change, right? Between 8 and 8.5%. Take last 15-year average. or even last 1 year, it's been the consistently the same. Profit margin, same case. It's a low profit margin, huge volume for the dollar business, $400 billion. And if you have a 5% profit margin, net profit margin, right, that itself is like $20 billion in a net profit. I've and the revenue is like a 10% growth. In the CapEx wise, all looks good. It's a good cash flow generator. So when I look at these numbers, one thing it tells me, it's not a hugely growing business because it's a very well established, mature business with a lot of other players, similar players. So you just can't grow like 40%, 50%, right? Competition will eat you away. So it's a pretty mature business with very predictable growth, both on the revenue side and on the cash flow side. Free cash flow yield, if you look at like 4.5%, that's amazing. So if I were to just look at this, and you want something which is steady, eddy, yeah, looks to be, hey, I think it can find a place in the portfolio. So, but this is all history. When you and I we are investing in for the future, right? Not for what has happened in the past, but it does give you some indication of, hey, the businesses would have gone through ups and downs in the past. So that's why I want to go back and look at for last 10, 15 years of history and then pull in the numbers. Right? If we look at it, pretty decent steady growth on the revenue, right? Sometimes look to be like a fake revenue growth. It's like a so consistent. And the same close to 8% operating margin, nothing bad. Again, looking at the 5-year CAGR, revenue 11%. I mean, that's, and looking at their pricing side, let me see if I have a price is mid 20s, low 20s price to earnings from pricing side, close to 1x sales. That's what we've been trading at. So you're not gonna get those, like on Teslas, wherein you get those huge ups and downs. This is not a roller coaster. This is the smooth sailing in a lazy river. Just take your raft, open a drink, and go and sail. That's what the history tells us, right? So looked at a Morningstar. That's why it rated as like 4 stars because it's been predictable, not easily disruptible because our American healthcare system is so convoluted and there are so much of a regulatory barriers to entry that the players that are established ones probably is going to continue there for long. Right. Look at a discounted cash flow model and looking at 9% discount rate, 2% terminal growth. DCF tells us that should be close to $500 worth. Right. Now let's look at the investment analysis. This is where, so that was all history about what the company does, its business model, competitors, segments, how it makes money. Right. Now the question is, if I want to focus on investing in this, I want to look at a different lenses, right? Strength of a business model. I think we talked about it. They got a pretty strong business model, bringing in the synergy from the healthcare as well as Optum, so that gives them the synergy. So that's a synergistic model. That's a positive side about it. What's the negative side about it if you have a much bigger organization? Number one is the regulators will start looking at you with a microscopic lens, saying, are you misusing the data that you're getting from Optum to discriminate against some patients on offering insurance and all that stuff, right? Number two is also if a lot more companies, M&A issues, integrating two companies. One is an insurance, another is a different business, culture is different. You run through those issues as well. So that's, I would say, is the downside. Regulatory environment and the competitive landscape, I think competition side, I don't have much concern, but the concern that I have is on the regulatory side. Governments have been starting to look at all these insurance companies with new administration. They're all focused on, at least that's what they say. What will happen is a different stuff. We haven't been able to solve this healthcare problem for decades. So, but at least their focus is on, hey, how can we reduce the cost of our healthcare, right? And they want a lot more transparency. Like pharmacy benefit managers have been under fire to get more transparency around the drug pricing. Government, who's a big player in this segment and is a big customer in the segment, and they also control the policies. So on one side, you have a customer who can change the laws to benefit themselves, right? So that's not a happy place to be in. And of course, we had ongoing DOJ investigations on these acquisitions and market practices. I think we'll talk about the practice of upcoding, etc., to extract more and more from the Medicare. And so that's a regulatory concern that I have. What are the growth drivers behind the business? You have a demographic tailwinds, right? Aging population. Age reversal technology is not yet commonplace. A lot of billionaires are trying to do it to reverse their age, right? Not for you and me, maybe for you, not for me. I'm not there yet, right? So we have a demographic tailwinds. You have Optum could continue to expand because this is where they can actually get into the private sectors and can expand their services, etc. But the risk you have is a cost inflation. That's why we see, even though the revenue has been increasing, their MLR also continues to go higher. So that goes against the growth, or this is kind of a little headwind. Sorry. Regulatory developments is a headwind. They had a cybersecurity incident. So one of the Optum's is a subsidiary, or the business segment is called Change Healthcare. And they had some massive hack in 2024. And that's where United Healthcare also got a bad press, because then they told all the customers who were using the Change Healthcare system, saying, okay, you don't have to pay for this, or whatever. So there was some pact that they had made with those practice offices, medical offices, right? And then I saw that suddenly they went back and said, oh, now you have to pay up. And they were like, we can't, because you told us that, we didn't have to pay up for it. And then suddenly, the whole PR was really bad. And then the customers and the medical office, they were coming and say, hey, this is not how you treat your customers. So final conclusion, if you want to look at, after looking at all this stuff, looking at the business from different angles, looking at the whole business segments, the stock has been down from close to $600 or 500 plus, I guess, or close to 630 to $300. This is down 50%. We had a couple of incidents on this one. The question that everyone is grappling with is it a value trap or is it a value buy? Right. And I think, Aditya, you asked for this company. Probably that's what you want to know.
Yep.
Should I buy this and should I get trapped, or this is a decent enough company? So if I look at just the history of the numbers, historically they perform. I think that time it looks like it is a value buy, right? But let's look. But the last 4 years we did not have Republicans controlling the Congress and the White House. Now we have a change there, which is one of the biggest customers. Over the years, the vertical integration with Optum and the insurance was that was the stuff that gave it a leverage against others. But now that's also becoming a liability because the political scrutiny is intensifying on it. If you're a small player, probably government will not be focusing on you that much. But if you're a big player and you've also done an acquisition that will give you advantage, government may say it's undue, then the government got more interested in looking into it, right? So that's the current concern. United Health DNA has been expansionist. It's been buying back companies. Can they do the same stuff for now? We don't know. Can they do it profitably? Now it seems to be a little doubtful. Amazon can't even buy a vacuum cleaner company. So the strategy that had worked over years may not be able to work in future, right? Something to keep in mind. It was a privatized version of Medicare, which is called Medicare Advantage, where United Scale had made an outsized impact. And I was just trying to understand what they say. So to me, it looks like, again, I'm not from healthcare. So only time I spent was in trying to prepare this. So government will have these insurance companies, they will basically manage the care for those who are eligible for Medicare and bill government for whatever care that they're provided. Right. So it's like kind of a private insurance, but government has outsourced it to United Healthcare, right? So what that has the whole idea behind this was that managing care more actively, private insurance could reduce the cost for the government. But what turned out to be, that's what the critic says, is what is now because the government is a payer and US government is not going to default. So a lot of the insurance companies have an incentive to exaggerate the healthcare need of their patients, right? Say if you're going to a doctor and say, I don't know, pick a disease, don't pick a fatal one. Let's say I have a gastrointestinal problem, right? I have a burning sensation in my stomach. I go to a doctor, they examine me, and then they also found out, oh, you know what? You also have this XYZ. But I feel great about it. I don't need to be treated. But if then the doctor can add more, and this is the practice, if you're someone from a healthcare segment, probably can correct me, but my reading tells me this is a practice which is called upcoding, because each of these conditions have a code. When you bill the government, you say I'm billing for this work, which has got a special code for it. So gastrointestinal problem has got a code, which is the right thing to do. But when I go there, they'll be, I'm under weather. I've never taken any medicine when I'm under weather for whatever, for as long as my life I believe it. But if I go to doctor for my stomach problem, tell me, Vivek, you're not good. Your voice is not great. You should take this medicine, and then they can upcode my condition and charge that from the government. So we've seen that practice, and DOG's investigation into United Healthcare practices around this whole upcoding. Right? If government is starting to crack down on this one, then all the additional money that this insurance was getting in probably gonna get restricted, right? On the valuation side, stock has never been cheaper. Like we looked at the valuation, what the currently it is. It looks to be cheap. Right? So it's not an easy decision. It was never a yes or no decision. Any investment decision, forget about United Healthcare, is always a gray. It's always a shades of gray, right? I don't think it's completely value that I can put in 5% of my portfolio. I don't think it is so bad that I would completely want to stay away from it, right? So a few things that I want to monitor first is focus on MLR trends, right? Which direction is it moving? If it is continuing to go higher and higher, as an investor, I'll be concerned about it. Right? As a patient, I'll be happy about it. As an investor, I'll be concerned about it. Right? How is the management addressing these, integration challenges, etc.? And I think second, this should be number 2, is developments in regulatory landscape. What happened to the DOG investigation, etc. Right? These are the 2 main things. One tells you about their operations. Other tells you about the government regulation industry. But I don't think we're out of the woods yet. But at this price point, right, giving some room for error, something that I won't frown upon. I mean, again, it's not an investment advice, but stock is cheaper the history of this company looks good. There are clouds, there are challenges because of a new administration, but who knows what might happen after 4 years. So you look at from that perspective and then decide. That's United Healthcare, long spiel, but it was interesting to dig deeper to understand how some of the healthcare stuff works.
Yeah.
Yeah.
And what was interesting to me is just the sudden drop. I mean, so yeah, and maybe that's just the market, maybe because yeah, my insurance is through them, so I see a deduction of a non-significant amount from my
Paychecks.
monthly salary go to them. So
Yeah.
Vivek,
Yes, sir.
I go through Kaiser now. It's excellent. But when I was in Blue Shield Center Health, it was very shoddy. Is there a comparison that you could make between the because there are no investors in Kaiser. It's a nonprofit, but they have excellent care. But would United Health be more like Sutter Health and Blue Shield shoddy?
As a consumer, I have no experience other than Kaiser. I mean, ever since I moved to US, I've been with Kaiser. But I know that Kaiser not at everywhere else. So I'll have to find out if I want to travel, which insurance I should switch to. Again, I have no experience to compare any one of them between which
Well,
is from a
because
quality perspective, which is good or not.
I'm telling you that Blue Shield Center Health was really bad, but Kaiser make sure that you're in decent shape. So I'm wondering
I
if
don't
Unit
know.
Health is like the for profit.
Yeah. No, I mean, the only thing I like about Kaiser is I don't have to carry across all my documents from here or there. Everything is in one place. It's so easy. And number two is it's inertia because I started with them, stayed with them. Not so difficult to switch to anyone else. Anyway,
Thanks.
so let's talk about the second company. If there are there any other questions on UNH? Even if I probably will not have an answer, but at least I can take the questions back and find out answers for you. Any questions we have on UNH before we move to XPENG? No? All right. Let's go to XPENG. Are you own the stock? So I have my investing. So we looked at, let me go back and we updated this one. Let's give the summary because I'm gonna get into the details now. So overall, okay, let me ask you, any shareholders of this company? I should have asked. Any shareholders of UNH? Anyone owns UNH?
yeah, I do.
Okay. Hopefully it'll give you some more information to make judgment. Any shareholders of XPENG, Xiaopeng? No?
Yeah, I was the one that asked for it.
Okay. Do you own this?
I bought options on it.
Okay. All right. So I own this company. I think I'm owning it for a few years now. So overall at a high level, this company is into what they call themselves a smart mobility, means smart EV, and also they are into eVTOL, electric vertical takeoff and landing. In common layman term, air taxis, flying cars. Okay, so but flying cars is far away, at least in US. I don't, also in China, I think Dubai, there's some good progress happening. So most of the discussion will be centered around their car business. Yeah. There are many, as you will see later, there are many EV companies in China. Unlike in US where we have one big player, Chinese market is very, very different. If it was not for tariffs, Tesla would not survive as a car company. Right? It's surviving because we don't let the competition come and compete against Tesla. So Xiaopeng focuses more on being, and they want to project themselves as a technology company. They want to build everything in-house. They design their own chips. They basically have their own, of course, they use tech from others, but integrate and build their own ADAS, automated driving and assisted systems, basically called self-driving system. They have their own car infotainment operating system. So they project themselves to be a tech company because it'll help them to get a better valuation, also attract better talent, right? Founded in 2014, so it's almost 11-year-old company by He Xiaopeng, who was a former Alibaba executive, and then I think there are a couple of other founders who worked in auto industry. And more important milestone would be, so they became public in 2020 in US, listed in NASDAQ. When 2020, everyone was going IPOs. We had one of the largest number of IPOs in 2020, 2021. So they also went IPO, milk the market. And 2021, they also listed in Hong Kong. And more importantly, there was $700 million strategic investment by Volkswagen. We'll talk a little more about it. They have a manufacturing plants in 3 places. Shaoxing, I don't know how to pronounce this. Guangzhou and Wuhan. Global headquarters on Guangzhou in China, and then they sell it through almost 700 stores. What's the business model? What are the different models they have? So their whole product portfolio has got SUVs. These are the high-end SUVs. G9 is the latest model. Then they have a sedans. Then they have a compact sedan. And this is what has changed the game for them over the last 1 quarter. Because this was, I think, they talked about in, I think, September 2024 that they're gonna, and maybe this is the first quarter that this Mona MO3, which is a compact, low price sedan. This is more for cost-conscious buyers. And then they also have a family-focused vehicle called X9, which is an MPV. So largely, these are the 4 different type of vehicles that cars that they produce. Like I said, they are very focused on building a lot of stuff in-house development platform, their overall intelligent car operating system. Then they have a pilot assist. Then they have their own AI smart driving platform and the chips. They design their own chips. A lot of work that they do is in-house because then they control the hardware, they control the software, everything. They can have tighter integration, right? They were also focused on electric vertical takeoff and landing. Like I said earlier, this is what you call as air car, right? Flying cars. It was planned launch around, I think it's 2023 where they did or was it late 2023? Maybe they did a kind of demo in Dubai, and they mentioned that we'll open for a commercial operations and open it for people to buy it in 2025. I don't know if they've started selling it yet, right? But this is again additional line of business. One more line of business is humanoid robot, right? So underlying, at least when it comes to humanoid robot, is a similar AI that you're using for your autonomous driving. You can reuse the same AI. Like a lot of that similar. Tesla is doing the same thing for Tesla self-drive FSD and using the same tech on the Optimus side. They're more focusing on tech-savvy middle-class consumers in China. Right? So that's their consumer segment. Is more important the strategic alliance with the Volkswagen. And if you recall, this talks more about the Volkswagen than the XPENG. Volkswagen has been signing up deals with I would say the second or third players, not the top ones, because they don't give a fly about Volkswagen is. Tesla don't care. So Volkswagen wants to enter into smart mobility or the companies that have got good software capabilities, right? So in the US, they did a partnership with Rivian. In China, they're doing partnership with XPENG. Again, investing, I think in the US also they invested some $6 billion or something like that, right? Or Rivian got that investment from Volkswagen. In China, they partnered with XPeng, got a 5% stake in this. But what I liked more about this is additional revenue model for XPeng, right? Which is that they will basically develop the R&D to become an R&D extended R&D arm for Volkswagen and sell their software and services to them. Okay. And the reason is probably I'll talk a little later. Why I found this will be more exciting. And then Alibaba is one of our earlier investor in them, and of course they use Alibaba Cloud to do all the data related stuff, analytics and car for building their ADAS. CATL, which is the biggest battery manufacturer, car battery manufacturer in the world. These are the partnerships that they have. Primary revenue is from vehicle sales, right? That's where you say you're a car company. That's why when you say Tesla is not a car company, where do they get most revenue? If you're 70% of revenue coming from a car, you're a car company. Right? You can say whatever else you want to say, but if your revenue coming from car, you are a car company. Secondary revenue is coming from some of the services, like sale of ADAS software upgrades or sale of ADAS software and upgrades to other companies, maintenance and after sale service, so on and so forth, which is typical for any other auto company. Right? They also have a charging network, so they can make some money from the charging also. More important, like I said, what the Volkswagen stuff was technical R&D services for Volkswagen. That's an interesting one because today they're doing for Volkswagen. How about doing for Volvo? How about doing for others? Because building cars in China is pretty competitive. So at least I'm like, okay, today you're doing for Volkswagen, maybe you can extend that later. Okay. And it's a high margin business. When it comes to manufacturing cars, overall across the world, the car business is growing at 2%, 3%. And the margins suck. It's like a 6-7% margin when it comes to the cars. So having the fact that you got another revenue stream, which is much higher margin, I think I like that. I'll skip the leadership and all the stuff. Inside ownership, 18% is owned by CEO, which is good. So if his shares is not doing good, he'll also feel a little bit of a pain, right? Or the primary competitors, Tesla, BYD, these are the biggest competitors. Then the small, comparatively small, compared to BYD and Tesla is NIO, Li Auto. Emerging ones are Xiaomi, right? Coming from cell phones to cars. At the end of the day, isn't we say that the car is a smartphone on wheels? So Xiaomi can find a place. Then you have a lot of other, car manufacturing companies in China. Then you got another one, Huawei, right? And of course the legacy ones. How can we forget about those? GMs, Fords, Volkswagen, BMWs, all those. I'll skip this one because I already talked about what their brand positioning is. So what their let me see how much time we have. We're almost over time, so let me go back on this one. Where do they stand? So when we are sitting in the US, we have a very few companies that trade on US market with the Chinese EV companies, right? We got a BYD, we have NIO, we have Li Auto, and we have XPENG. Now, at the end of 2024, even though we look XPENG as a great company, it doesn't even picture into, I think, the top 10. It's not even top 10. Right? So you got a BYD has got the biggest shares, almost 1/3 share of the China's NEVs, new energy vehicles, which will include hybrids also. And then the Geely, then you have a Tesla, then Lee, and then so on and so forth. That was the share till end of 2024. Like I said earlier, in Q4 of 2024, they introduced Mona brand, which is their mass market brand. That has really worked out for them. So in Q1 of 2025, they shipped 94,000 smart EVs, which was like almost 300% increase from a previous quarter. So now that has put in, you know, the XPENG to be number 8 or number 9 so far in China because of this new Mona MO3 model. In May, they delivered 33,000 units, which is 230% increase. From Jan to May, overall, the vehicle delivered increased by almost 300%. Of course, it will impact the margins because Mona is focused on high volume, low price point. So the margins will be impacted, but but it's a much bigger revenue growth that they will be able to get it, right? So the introduction of Mona M3 and some refresh of the existing models that they have done, that makes me a little more exciting about its future. Saying maybe 2025, 2026 has got a better days ahead of it. So look from that perspective. So far, it's been a laggard in terms of the car sold, in terms of the revenue. I think I have a comparison of revenue, but maybe 2025 will be different because they're building a new car which others like. So here's the numbers. So for now, when it comes to the numbers don't look good because it's all about it's all about the future story. So don't even look at numbers and say, should I invest in this or not? Today, it's all about the story of future, so I'll skip the numbers. Right. Now I'm looking at a comparison between Lee, Neo, and all that stuff. Forget the numbers. I just want to look at overall market cap perspective. So Lee Auto is the biggest one, right? And then XPEV, and then Neo, right? So, and Lee Auto is the only one which is actually profitable out of all these three. So again, overall, if you have to just look at a number side, then you will not invest in anything other than Lee, because that's the only profitable EV company of all these three. I did pull up some data from a Morningstar, right? They say $18 is their estimate fair value. I think that right now the stock is a 19 or 20. Don't pay too much attention because in that $18 discounted cash flow model, it is close to 19, right? There are a lot of assumptions built in. And when the industry, any company is at such an young stage of its life cycle, all those assumptions, you don't know how many of them will even turn out to be true or it could be way off. So a lot of assumptions get baked into at such an early stage. So I won't pay too much attention on to $18. But the key question that we need to ask ourselves is, can they attain or sustain the profitability? So they mentioned that there's going to be a EBITDA positive by 2025. Can they do it? Anyone can build cars and keep on selling at loss. But at some point of time, you have to tell me that you're going to make money sometimes down the future. The reason I don't buy Lucid stock is I don't see any future yet. Makes great cars. Lucid cars are the great cars, but they lose $300,000 on each car that they make. And there's no visibility into if can they ever make money on that. As an investor, I need to get that visibility. XPENG did give us a visibility. Let's see, can they actually do it? Will Mona brand successfully drive substantial volume growth? Last 1 quarter, we have seen that it is, right? We'll have to see, if they can continue. And of course, the other, side businesses are how big can the technology service business become? What happened to their air, flying cars, etc.? Can that become a long-term sustainable business or not? Again, those are additional stuff. If I were to invest in XPENG, right now I will just focus on the vehicle growth and can they manage their operations to at least become operating profitability, right? I'm not even asking for net profitability. At least make sure you can have on some operating profits. Otherwise, they will continue to have to dilute us like they diluted it when they gave 4%, 5% stake to Volkswagen. Where that 5% came from? You and my pocket, right? They diluted us. So that will be a challenge if they can't run it, the operations profitably. And with so many companies in China, eventually, not all of them are gonna survive. It might get taken over by BYD, who knows? Or it might just die its natural death if it can't survive against that competition. So right now, it's a high growth and high risk. So if you want to invest on this one, position sized it accordingly. And 2025 seems to be a little more exciting for them because of a new model refresh and the pickup in the vehicle sales that I have seen in first quarter. That makes me a little more hopeful. But I'm not gonna go out, and put a bunch of or buy a huge number of, make it a big percent of my portfolio because the risk is still there. I have yet to see that the company can breathe on its own and can get off the ventilator, which I have not seen it yet. They told us maybe watch till end of 2025. I'll watch it. And if the business improves, the operations improves, there will be an opportunity to buy then. Doesn't matter, did you buy? I mean, if you bought Tesla at $100, $150, not huge change. Or let's say in the earlier part, $50 or $70, not a big change. So that's on XPENG. Hopefully this is helpful. Fishing said, did you compare with BYDDF? Actually, BYDDF's financials are not available on the website from where I pull all the financial information because it trades on OTC market, right? It doesn't trade on an exchange. So that's why it's got a F behind it. So its financials are not available on the website, so I couldn't compare. If you really want to take an exposure to Chinese EV, this is the biggest player. Number one. We started this meeting with talking about focusing on number two or staying with the biggest one. So BYD is the biggest player. Right?
Well, my biggest question is, do you think that XPENG is going to be affected by the BYD price cuts? Because I looked into it and they're kind of going after two different price segments and sectors. You know what I mean? Like there's some overlap, but there's not that much. BYD is way more low end, mass production type automaker, and XPENG is more high end, high tech. So it's like I feel like it's not. And I even looked at their sales. Like their sales are still on track for this quarter to meet their estimates. And if that happens, next quarter too, that they should go break even or profitable. You know what I mean? Like
and I think sales has been held by again
new models,
lower
new
price
models.
Yeah.
Well, no, but they got new models. They're also expanding internationally.
Correct. Yes. Now, I think all these companies expanding internationally. XPENG is also expanding in Europe. By the way, BYD overtook Tesla in Europe as the biggest EV sales. So it's pretty.
Yeah, but it's like my whole reason or thesis for getting in is because, like I said, it's a turnaround story. They improve their margins quite a bit. It's easier for a company that size to grow more than BYD just because of the size of BYD. I'm not saying BYD not going to grow, but like XPENG has the bar is set lower and they seem to be jumping over it. That's, you know what I mean? Like
Yeah, no, I agree. And I think you said you used the right word. So you don't need any of my analysis. You said this is a turnaround story. And if you know what I think it's a Charlie Munger or Warren Buffett says, right? Turnaround seldom turn around. So
Depends if you pick the right one. Yeah.
exactly. Yeah. Because most of the turnarounds don't turn around, but there are a few who will. So I think the position sizing is important. For me personally, I still consider it as a high risk investment because not all these companies going to survive. BYD, XPENG is probably maybe number 8th or number 9th in overall sales. I don't think all these companies going to survive. Maybe in China it would. China operates differently. Who knows? But looking at the history on the US side, right, 1940s, 50s, we used to have a few hundred automobile companies. Then we come to tens of automobile companies. Now there are a handful, like it's less than 10 big companies survived, right? They'll either get acquired, get merged. Some of them will just die down. There's too much of a competition, right? So the idea is to overall, as an auto industry, is not a great business to invest in. Overall, airplane is not a great business. Airline is not a great business to invest in. So we have to be very picky about individual companies. Anyway, so that was whole XPENG. I guess that's it for today.